So welcome back to the channel. Today we will be going through the trades that we had from Monday up to today, that is Friday. Not been with analysis, backtesting, somehow held up a little, but these are the opportunities that I had. I had 4 trades, no, not 4, but 3 trades, very successful trades, and 1 missed trade. Actually, you can see this one was from today that has already hit the TP. So let us first derivative start from Sunday till today. So as we always do, we start from the weekly time frame. We were still in a weekly order block that was still resisting price, and then what had caused price to be rejected to that point, it was this breaker. Then, as you can remember, I had told you that we should have been careful with this weekly order block. Let me mark it. We had that daily order block that was a resisting price, and then here up, what did we have? We had a daily fair value gap that was also affecting the price. A daily fair value gap. Okay. For our, yeah. So now we can go to the 1 hour time frame and look for an entry. We look for more confirmations. So on the 1 hour, what was happening? We had a bunch of bearish candles. So that means they are more than 3. So that means already we can going bullish. And then at 20:00, before 20:00, we had been left with a 1 hour fair value gap at that zone. Okay, so these were left out orders. Remember, fair value gaps as when price pushed with magnitude over a short time and left some people with left orders. Okay, and then at 20:00, where were we? We were also in a 1 hour order block. So according to our strategy, at the back of our minds, we were expecting that this 1 hour order block would push price to a 1 hour fair value gap. But then it did not. It did not push price to this 1 hour fair value gap. So personally, I waited for price to push up to here, but it didn't. So I didn't have any trade. I wouldn't have risked it, because you can come and get an entry here, and then maybe after price pushes back to this 1 hour fair value gap and hit your stop loss. Okay, so that was for the Asian session. I didn't force anything. My strategy just didn't work at that day. Then, so we go to the New York session. Okay. So the New York session, first remove this. Must have our charts clear. So we were in this 4 hour order block. Okay, but remember, we had already swept a daily liquidity. So this 4 hour order block will probably be violated. It doesn't have that enough strength to hold this liquidity. But then what had we left up here? We had left a 4 hour fair value gap. We had left a 4 hour fair value gap at that zone. So we expected maybe price to push to this 4 hour fair value gap and then continue selling. But let's see if the 4 hour fair value gap was are respected. Okay, so what happened at this 800? So on the 1 hour time frame, we had a 1 hour order block at this zone, and we also had a 1 hour fair value gap. Okay, but remember we are in a 4 hour order block. So what were expecting? Maybe price to probably push to this 4 fair value gap, then go low. Okay, but then and also at 500 600 we had a bearish engulfing not a bearish engulfing candle, but a bullish engulfing candle. So our buy setup had been confirmed. So we were to go to the 50 time frame and look for maybe a strong order block that will support price to push to this order block. Okay, but then what did we have? We had this, actually we had a series of order blocks here, but my most important one, what I would look keenly at will be this 15-minute, the discount 15 order block, and also it had some magnitude. Okay, so I think this day I was not in the charts, but I would have probably done this according to my strategy, what it is. Remember, we don't have to be right all the time. We just have to be consistent on our strategy because we already know our edge, and then it will pay off. So this day actually will be a loss because this 15 are blocked price. Price continued selling and selling. Okay, so we consideration so that when we are going to count our wins, we will not sugarcoat anything. We will not just say that we are the wins a loss. So on Monday that will be a loss, but it will be a good loss for us because we followed all that our strategy tells us. Okay? And if you get a loss, therefore you get out. But maybe some will not take. We have got any at this zone. Okay, let us go on to it. So price pushed lower. Where did it go? As you can see, we had a break of structure there. Actually, it's not a break of structure, but a change of character. Price was its delivery. And then what did we have? We had a breaker block here, which was valid because we had also had this 4-hour fair value gap. Okay, so let us go into the 1 hour time frame and see how it reacted. On the 1 hour time frame, see it respected it. Then what did it then do? It did not print a bullish engulfing candle, but what it did is it printed out 2 bullish candles. And remember, our strategy says that if you see 2 bullish candles in your direction, then that can be a low probability trade. You can look for an entry there. Okay, so we look for an entry from 1200 and see if we hit one. And where are we targeting? Remember, we are targeting our favor. Is the important point. And if we respect this 4-hour, point of interest, definitely we will have to go to this other 4-hour point of interest. So let us go to the frame. If we have had an entry. So remember, we are looking for an entry after 1200, that is after the printing out of the 2 bullish candles. This is 1200, the market. Okay. Yeah. And what did we have here? We had breaker block. And what did we have below it? We had a fair value gap, a 15-minute fair value gap below it. Okay, so this would have been our best entry and our stop loss below then this zone, and then we target the 4-hour fair value gap. Okay, that would have been our entry. And then someone can ask, why shouldn't we have waited for it to come and print to this 15 order block? Yeah, we have a 15-minute order block at this. Sorry for that interruption. We have this 15-minute order block at this zone. Why shouldn't we have waited for it to come and tap to this order block and then go up? See what was happening on our time frame. Remember, you can also gauge your entry momentum that the candles are giving. Remember, the candles are the language of the market. So as you can see, 1100 had printed out a very, very bullish candle. It had a lot of momentum, and up to this zone there was no good point of interest to resist price, because we had not even tapped to this order block, so there was no that strong point of interest to reverse price to the 15-minute order block. That is why our entry came in at the 15. Okay, so if someone would have waited this trade, he will still have had a risk to reward ratio of approximately 1:7. That would have been a very, very good trade. Then had patience to hold it until it is his point of entry. Okay, so that was the Monday Asian, not Asian, but New York session. Okay, so we go to Asian session, that is the waking up of Tuesday. So on the Asian session, what did we have? We had this fully respected we had this this 4-hour breaker fully respected, and also there had been some buying momentum on the 4-hour time frame. As you can see, before the no bearish, it was still good on the bullish bias. So let us go to the 1-hour time frame. On the 1-hour time frame, what had started rejecting price, it was this 1-hour breaker. That was the one that was rejecting a little. Then on 2000, price had first ran to sweep this liquidity. Therefore, you are expecting also some liquidity to be swept. The buyers that had gone into the trade late and put stop losses at will definitely be swept, and then price will run without them. So because this is a 1-hour point of view, bullish buyers, where do we expect price to push to? We expect price to push into a 15-minute order block that is true, and then continue running upwards. So we go to the 15-minute time and see. On the 15-minute time frame, remember we didn't have momentum to push lower, but this also would have been a liquidity zone, because definitely some of the people who entered their positions at this zone would put their stop losses here, and that would make them vulnerable, because the market makers might move the market to push their stop losses and then go up. And definitely, as you can see, some of them were tapped out at this zone. But then, what did we have at this? We had this 15-minute order block, and then so that we can be sure that we are not being tapped out, will not have gone into break even because there was a 15-minute breaker here, order block here. So if price didn't wasn't rejected at this zone, then it would have been rejected at this order block. Okay, so that is why I had not someone would not have gotten into break even at this. So what did the price come and do? It came, swept some liquidity and then started running upwards. Okay, then because it is liquidity, one might had come and noticed that it has respected this 15 order block and then created this 15 order block and maybe would have risked at that zone and then targeted what? Targeted till the 4-hour fair value gap. That is 507. A risk to reward ratio of 1:4. Still, it would have been a good trade. Okay. So now that is the Asian session. Now we go to the New York session. The price came and tapped into both our TPs, 700 pips and 507 pips. So now let us go to Tuesday. What we had Tuesday session. So what is our gap for trading? It is 0 and 0.00. That is the lunch. So what did we have here? As we had said, let me first delete this for our order block marking. Yeah, as we had said, price came to our 4-hour fair value gap. And then after tapping into the 4-hour fair value gap, what are we expecting? We are expecting price to push lower and maybe come and sweep this low. And maybe after it can go and sweep the daily low. Okay, so on the 4-hour fair value gap, I came to the 1-hour time and looked for what? Bearish candles. Okay, so at 300 we had printed out a bearish candle 1, 2. Okay, that is at 400. So that meaning it can be a low probability trade. And then 500 we printed out a bullish candle, 2 bullish candle, but they didn't engulf the 400 candle. Then what happened at 700? Another bearish candle, but it engulfed candle. So that means that we now have a high probability. And now go to the an entry. Okay, and if price first taps into this not fair value gap but liquidity take, we can wait for an entry in a premium 15-minute order block. But if it doesn't, we can wait for an entry in any order block or a fair value gap. So where did I get into the trade that day? So as you can see, happened we had a series of order blocks here. And then 800 opened at this zone, then first ran up. And where did it run to? It ran to a 15 order block at that zone. So it first didn't come and sweep liquidity, so this would have been our entry, and that is why I got into it. A stop loss of other, and then price came tearing down, then didn't have a re-entry, a retrace to this 15 block. It just came running down and down. So which was TP. So at this zone, you can see we had a 4-hour order block. Mark it, and that's clearer. we had this for our order block. So this was my TP, let's say my first TP, but according to our analysis and our system, we would also have weighted price to come to this zone and sweep the 4-hour low because we were bullish. But first for me, I targeted this and got a risk reward ratio of 1:4.36. Still, it was a good one. Complain. So that was Tuesday, the New York session. Now where do we go next? We go to the Asian session and see what was happening, if we would get another entry or what. So let us mark 20. I'm trying to make it as simple as possible to the beginners. So, yeah. So let us go back to the 4-hour time frame. Okay, on the 4-hour time frame, we were still in a 4-hour order block. This order block. This is a 4-hour. Sorry, this 4-hour order block. We were still in that 4-hour order block. We hadn't rejected it. We had just swept liquidity. And then what did we have? On the upper side, we had a 4-hour fair value gap at that zone and a 4-hour gap at that zone. Okay. Then now we can go into the 1-hour time frame and we see our price tap into either of these order blocks. Then we can wait for confirmation on the 1 hour to get into that trade. But now there is something that should be how these 4-hour candles were printed out. They were very, very bearish. So at the back of your mind, you should have this in mind that there is a lot of selling momentum. So price might not get the momentum to push to this premium fair value gap, this 4-hour fair value gap. It can just go with this discount for our fair. So you should also take keen interest at this. So on the 1-hour time frame, what was happening? So at 20:00, what did price do? Again, tapped into the 4-hour fair value gap, swept liquidity. Before liquidity, there were some stop losses at the zones, and then did what? Started running downward. Okay, but then there is something at the, you can see what was happening here. This was a 1-hour order block, and what had happened at 18:00, we had printed out a bearish engulfing candle and another bullish candle. So this candle was just for sweeping liquidity, and you can see it did not even close above this high, or it did not mitigate this 1-hour order block. So we still have this two candle confirmation. So let us go to the 15-minute time frame and see if we got an entry. Yeah. And you can see what happened after the sweep of liquidity. You are left with a 15 order block at zone. Price had rallied downwards with magnitude. So definitely your point of entry or your entry would have been at this zone or even at this fair value gap. Any would have done. Then where should your TP have been? Let's go to your TP should have been at this. A risk to reward ratio of 1:2.55. Actually, that is why I didn't take the trade, because the risk to reward ratio was low for me. I only take trades that have a risk to reward of 1:3 and above. But still, to some other people, it would have still been a win. Okay, so that was Asian session, and that is why we took the trade. Now let's go to the New York session. Uh, if we would have got an opportunity, yeah, that is New York session on Wednesday. So we still return to the 4-hour time frame. It is we still return to the 4-hour time, and you can see already before the New York Open, we had already mitigated or violated this 4-hour breaker. Okay, and then we had a 4-hour fair value gap below us, so this would have been a very good point of interest for me. And we had closed, candles had closed below this with their bodies, so definitely we were still in a selling momentum. Then at this zone, what was there, we had this 4-hour order block that would have some rejections if price went up. Okay, so now personally I would have waited price to come maybe to this 4-hour fair value gap so that it can have momentum, maybe to push price to this liquidity takes all these fair value gaps, and then we can sell, because the market doesn't go in a straight, doesn't go it doesn't go like, if you are bullish, it doesn't go like this. It has to form a series of higher highs and higher lows, higher highs and higher lows. So at this point, what did I do? What did I look at? So this was a 4-hour fair value gap, but when I woke up and then I saw that there was something that was rejecting price across the zone, I looked at the left side and then came to find out that we had a 4-hour breaker. Okay. Oh, sorry. This was a 4-hour. We had this 4-hour breaker, and this was the one which was resisted. As you can see, nobody was closing below the 50%. This 4-hour breaker, all of them were coming and being rejected. So that means this was a strong point of interest. And because this is a 4-hour breaker, where do we expect price to be pushed onto? So we expect one, price to come to this 4-hour order block. And then we also expect price to maybe sweep this for liquidity, because there was a premium favor gap here that had not been tapped into. Okay, so therefore we can take a trade to the either of these points, either this one, or this one. So on the 1-hour time frame, I came and found out that at this is at 1800. Let us mark 2000, then 0000. So at 1800, we had first swept liquidity. Okay, we had swept this liquidity and then formed a bullish engulfing candle. And then after forming it, what did we have again? We had a 1-hour order block at that zone. And above us, what did we have? We had this 1-hour order block again. So at 2000, what did price come to do? It came to tap into this 1-hour order block, because a 1-hour point of interest pushes price to a 1-hour point of interest. So now we can now come and look for an entry after this tapping. So I went to the 15-minute time frame. Then what did I find? I found a break of structure, a fair value gap, and this was my end. My stop loss below this point, and my target was this high, and it was a 1:3, a risk reward ratio of 1:3. And what did it do? It went and tapped into my TP. So that was a good trade, a good successful trade. Okay, so now we can go to the New York one of Thursday. Okay, so we mark what? We mark 800, and you can also go into your charts, analyze them, do what I'm doing. No when the time works for you, know what works for you, and then you can refine it and it as your strategy. So at 15:00, we go back to the 4 hour time frame. Already we know in our daily time frame that we are selling. So on the 4 hour time frame, what had happened? So our price had come, swept liquidity, violated this order block. It's not bad, but it had come and swept liquidity, tapped into the 4 hour fair value gap, and nobody had closed above this high. You can nobody had closed above that one. So this is a very, very good liquidity. And if this is a 4 hour point of interest out, where can be our next buy? Where next do we expect price to push to? We expect price to push to this 4 hour of the block. Okay, so in the 1 hour time frame, what had happened? Price had come at 800. It had printed out a bearish candle, but we have to wait because it is not engulfing. We have to wait for another bearish candle. And what happened? At 900, it printed another one. So now we can come after 900 and look for an entry. Okay, because already we have two candles to a direction that we want to take, and therefore, according to our strategy, it is a low probability trade, but we can still take it if we get an entry. Then what happened? We had this break of structure, a fair value gap left above, and also another fair value gap left above. So our entry would have either been at this point or at that point. But what did price do? Price didn't come back to our entry. I even expected that this 1 hour fair value gap would push price back to our 15-minute order block, but then it wasn't respected. So that day we had our trade missed. We didn't have a trade, and it was good. Okay, because we don't. It is not a must that we take each and every trade. We just utilize the trades that we are getting in our strategy. Let me tell you, I've been trading for a year, I think 3 years, 4 years now, and I'm being realistic. There were moments where I questioned if it was even for me or I should quit and focus on my remote job. When people see profits, they rarely make mistakes, frustration, sleepless nights, and lesson that came before them. A year ago, I thought trading was all about increasing my income, but then I learned that trading is about controlling yourself than controlling the market. So if this didn't reach to your point, why come and start it? Even if you get a profit, you'll not go in a loss. Still, you haven't exercised your okay, you haven't learned, you can't see the mistake. Okay, you find that you risk more than you should because you don't want trade could change anything, everything. You revenge trade after losses, and that isn't what you should do. Okay, so you don't need even to win every trade, you don't need to catch every move, you don't need to trade every day, you don't need to prove anything in the market. First, protect your capital, stay consistent, show up every day, and utilize the opportunities that come on your way. Okay, if the strategy tells you to take a trade, take it well and good. If it shows you not to take a trade, don't take the trade. Okay, so on this Asian session, we didn't get a trade. Didn't come to our point of interest, and it is good because you don't have to trade every day to be profitable. Okay, so I now want us to come to the Asian session and see if we'll have what an entry. So going to the 4 hour time frame, what had it been happening? Price had rallied downwards. It had formed one bearish engulfing candle, engulfing, two bearish candles. That means there was some selling momentum being introduced in the market, and it is supporting our buyers. Okay, so on our time frame, what had happened? This 1 hour fair value gap had supported price. Okay, it had supported price cleanly. Okay, and then what had happened at 1600, price had formed a bearish engulfing candle, another candle, and then at 2000, after this bearish candle printed out, what had been formed, what was formed, we formed a 1 hour fair value gap at that zone. Okay, and then at 2000, first price came and swept liquidity at this zone, a 1 hour liquidity. So that means if we have a 15-minute order block at either of these zones, that can be our entry. And what are we targeting? We are targeting our 4-hour order block at this zone. Okay, so now we can go to the 15-minute time frame. Okay, and on the 15-minute time frame, what did we have? We had a good break of structure. Okay, and a 15-minute order block that is in line with our 1 hour fair value gap. So this is where we took our trade, a stop loss above at this high, because this order block can also be taken. Price can come running up to this order block and then go down, but we first took this one, okay, because also strong. Okay, and then our stop loss here below, and we have had a risk to reward ratio of 1:3. Okay, so that was what had been happening throughout the week. And you can see this 4-hour order block was reversing to a 4-hour fair value gap here. So we expect price to uh, uh, then print out bearish after that for our fair value gap up to our daily low. Okay, so that is what I had. I hope you have learned. I hope you have understood. So like, share, and subscribe.